Forget about dusty old ledgers and boring compliance checks. Today, we're going to put on our detective hats and look at auditing in a whole new light, not as a chore, but as a thrilling investigation. We're on a mission to uncover the real story hiding behind the numbers.
You know, every good investigation kicks off with one big question. And for us, it's this. What are these numbers trying to hide? This is the lens we're going to look through for every financial statement, every ratio, and every trend. We are absolutely on the hunt for the truth.
And hey, every good detective needs a solid plan, right? So here's ours. First up, we'll dive into the case of the numbers. Then, we're going to open up our detective's toolkit to see the tools of the trade. After that, we'll follow a professional framework for investigation, learn the art of connecting the financial clues, and finally, the exciting part, we'll learn how to spot those telltale red flags that signal trouble.
All right, first up, the case file. Think about it. Every set of financial statements tells a story about how a company did over the year. But is it a true story? Is it fact? Or is it fiction? Well, that's what we, as financial detectives, are here to find out. Now, our investigation isn't just some random search. It's a really focused inquiry into 3 key areas. First, we're looking at performance. Is the company really as successful as it's claiming to be? Second, we check for consistency. Does the story the numbers tell this year make sense with last year's story? And third, and this is the most critical question, we assess the risk. Are there clues that point to some funny business, manipulation, or maybe even outright fraud?
So to answer all those questions, we're going to need the right tools. An auditor's analytical methods are kind of like a detective's forensic kit, you know? They're designed to reveal what's hiding right there in plain sight.
Okay, first tool out of the bag, comparative analysis. This is all about spotting patterns and things that look weird. We use horizontal analysis to compare data over time, like year after year. And we use vertical analysis to see how the numbers relate to each other within just one year. We're looking for shifts that just don't add up.
Take a look at this, for example. At first glance, you see a 20% revenue growth, and you think, hey, that's great. But a good detective's eye catches something else. The cost to get that revenue grew even faster, by 30%. Now that is a huge clue. It tells us the company's profit margins are actually shrinking, and our job is to figure out why.
Our next tool is ratio analysis. The best way to think about ratios is like the vital signs of a business. They turn these huge raw numbers into really meaningful indicators that give us a quick read on the company's financial health, its liquidity, its profitability, its efficiency. They don't give us the final answer, but they tell us exactly where we need to start digging. And finally, we've got the ultimate reality check, cash flow analysis. See, profit can be massaged with accounting tricks, but cash rarely lies. This tool helps us see if the profits a company claims on paper are actually backed up by real cash in the bank. It's what separates real performance from a financial illusion. So, we've got our toolkit, but a great detective doesn't just have cool gadgets, right? They have a process, a systematic framework that makes sure every single clue is examined and no stone is left unturned. This framework is basically the detective's playbook. It all starts with defining your objectives. You got to know exactly what question you're trying to answer. Then you gather and reconcile all the data, making sure your clues are solid. Step 3 is performing the comparisons, using all those tools we just talked about. Step 4 is crucial. You interpret what you find by comparing it against benchmarks. Is this normal for the industry? Is it consistent? And finally, you document everything. Because in this line of work, an undocumented clue, that's just an opinion. Okay, this is where the real detective work begins. Finding individual clues is one thing, but the true art, the real skill, is in piecing them all together to reveal the complete story. So let's look at a really critical comparison: profit versus operating cash flow. See, net profit is what a company claims it earned. It's based on accounting rules that can be pretty flexible, but operating cash flow, that's the reality. It's the actual cash that came in the door. The gap between those two can tell you everything you need to know. Now, look at this case file. In year 1, profit and cash flow are tracking pretty closely. Looks good. But then in year 2, something really strange happens. Profit jumps way up, but the operating cash flow totally tanks, creating this massive 1.1 million dirham gap. The company looks more profitable on paper, but its actual cash situation has gotten way, way worse. So, what does that huge gap actually mean? Well, to a financial detective, that's a giant flashing red light. It's a major clue that the company might be booking sales that haven't been paid for yet, or even worse, sales that might not even be real. The profit story and the cash story are telling two completely different tales. And this brings us right to the climax of our investigation, identifying those telltale signs, the red flags, that tell us the financial story we're being told might just be a work of fiction. Here are some of the classics, the things that should immediately make a detective's ears perk up. A sharp rise in revenue without the cash flow to back it up, just like we saw. Wild, unexplainable swings in profit margins. Sudden, really convenient changes in accounting estimates, or key financial ratios that are just all over the place from one year to the next.
This table shows you exactly how a detective connects the dots. We see an indicator on the left, like our declining cash flow with rising profit, and it points us directly to a possible issue on the right, like fabricated sales. It's all about pattern recognition. High margin volatility, that could be a sign of some hidden expenses. Each symptom points to a potential cause.
So, what's the big takeaway from all this? It really boils down to this one powerful idea. The numbers themselves, they're silent. They only start to tell their true story when a detective, an auditor, comes at them with a curious, skeptical, and structured mindset. The tools are important, for sure, but the investigator is absolutely essential. So, the next time you look at a financial report, what story will you uncover?